All right, welcome back to another edition of Harmonic Trading. Wanted to touch on a move we've been looking at for the last few days. Decided to go back and really do a video on the reason, the assumption, the major assumption of why we think the market's going up, why we want to be buying, why we're long. Many people might think we've come a long way and we're bound for a big pullback. And I think there's something to that, and that pullback is what we're looking for. And that pullback can have a small stage or it can have a large stage, and we need to be ready for both. The videos that we've done previously in the last two episodes were really all about the small pullback. But let's look at the big pullback. Let's see what could happen. We had this one on the table maybe last week about last week, and we've kind of forgotten about it, but we need to have it in play. So here we are in the white large trend channel, and we are nearing the center line of the white trend channel. Get rid of something here. Nearing the white center line and really targeting this little peach box here. So the little yellow arrow here represents 246.20. That's sort of prime optimal pricing for the small retrace. However, if it turns into something larger than this, we would actually be somewhere here. Let me map this out. This would be somewhere closer to this area here, somewhere right around 237. So let's figure out exactly how we know which one we're going to go to. So that is hidden here in this purple line. We're going to turn this purple diagonal line into a slightly brighter color so we can take a better look at that. And what we're nearing is the support of this upward price line. And this upper price line is basically connecting the old low here back in the pre it's clearly a bull market stage up to this most recent low. And so we're going to get some natural support here. It is not by coincidence that it's right in the center of our harmonic trend channel. So if they both go, they'll pretty much both go at the same time, and you'll have both of those wave of sellers, people who are watching this particular technical analysis metric. Both of them will become very bearish at once, and this will probably be 40% of the traders. Many traders will be looking at this exact price point. It also coincides with the Fibonacci folks. The Fibonacci folks are going to be looking here at this reflection box, and when the price 241.95 goes, they'll be extremely bearish. And according to what we see here, they'll actually be late. There'll be other groups of traders who are already very pessimistic and bearish, along with the moving average folks, the folks who love moving averages. They'll be the first ones to bail out. However, the moving average folks, they will have bought the moving average, and after they broke below the moving average, they have a sense of patience about their trading. It's not until they go and reach back up for that moving average that they'll probably liquidate their position. Many of them will still hold. Some of them have some very large deviations around their moving averages that they find to be within their tolerance. So in any case, we have a moving average, upward trending price line. We have the base, the center, the base of the trend channel coming through here. And then we have the Fibonacci folks. All of them are right here. So this is why there will be a lot of volume that will kick in here. This is why it will become very volatile. And when you get really near to these lines, the volume will immediately just dry up. Where it was most previously a very liquid market, it will dry up, and it will leave traders a bit surprised that they won't be able to liquidate their positions in the same type of liquidity environment that they had maybe just a few minutes or a few hours before. This lack of liquidity is exactly what causes the large price spike or decline, whichever way you want to see it. We call it flash. If it's up or down, we'll call it flash. So we expect that this low volume environment that suddenly sneaks up on the market is exactly what creates the large downward candle that may enact the second stage of the selling. If the buyers are not there to support this market, or just generally speaking, if a whole different chart is in play, this will be a huge key to that puzzle, and we'll be able to know more about that when it happens. So that price is going to be right here around 245 or so. If we were interested in seeing what Murray Math would have to say about that, we're going to look and see exactly where is that, and we already know where it is because Murray Math would define to you the place where people freak out, and that is the bottom of the basement. So without really needing to chart this, we will go ahead and chart it to prove a point that Murray Math is almost always correct. It supersedes any form of technical analysis and includes every possible mathematical configuration of any algorithm anyone could ever even remotely propose. That's why Murray Math is so powerful. Most people don't believe in it. It's hard to understand, but let's take a look. Murray Math line here is actually 245, 246.04, somewhere in that region. It is at this point that all of the technical analysis folks will bail out, and by and large, that's every trader. Murray Math line, very powerful here. So we'll be looking for all of that. So we're very bullish up into this point, and then as we go beyond this point, it's not that we're not bullish, because we have a much larger perspective that we're really looking at, but we do expect this next leg of selling to be extremely, it's something you could depend on, and it would drive the price to twice as far as it is from now. And while it's happening, it may not seem like a lot, but as far as your entry getting in between 246 and 241 or 242, depending on how much leverage you're using, that's a pretty substantial amount of money. If you were looking to enter around here and you've been watching this retrace, a move from here to here is exactly double that amount, and it'll happen very quickly, very soon. Not very soon for sure, but if it were to occur, it would happen very quickly. So we want to be careful around here. This is why people who are day trading, who have speed, who understand that they need to rebuy into this position very quickly, have the ability to be sitting next to their computer and update orders. They'd be able to exit here and then rebuy here, something in this neighborhood. So no reason to really just walk through all of this downside. It is almost guaranteed if it begins to occur. You'll also have the ability to retest the upper side of this trend channel. And then, of course, if you were down here and you're talking about prices in 235, 236, somewhere around Murray Math 1/8, this is a huge discount. This is a completely different position. If you were able to take this position, you'd be profiting at the location that you purchased from. So this is like a completely second set of trades. And that's why we're careful to say that the newer traders, the younger traders, the traders who don't have as much experience, they want to buy on upward momentum. They want to buy here on the top side of this trend channel. They really don't want to be playing around down here, because though it's a great trade from here to here, they are going to have more trouble distinguishing when to buy and when to sell and when to get out. To them, it just seems like it's just a continuous buy, and they're accumulating huge positions, and they're really not mentally prepared to actually get out. When they do get the bounce that is expected from the bottom of this frame, they won't sell that position, and then they're thinking that they've been saved. They're breaking even now. Their two-stage purchasing and their accumulation has seemed to have served them well, and they'll get stuck right there, and it'll be bad. It'll roll over on them. It'll come down here. At this point, they'll be sitting on a larger loss than they have in the entire time, and they'll think that it's accelerating lower, but it really isn't. It really isn't accelerating lower. It just appears that way. It's actually just retesting this low. A lot of them will bail out right there and just screw up the whole trade. So we want to try to stay away from anything like that when we're talking about simple strategy. We would prefer to just simply be patient and purchase down here or not at all, or purchase here or not at all. But we don't want to suggest that you should accumulate through the entire frame. Accumulating through the entire frame will undoubtedly exceed the capital control requirements that you have or should have been trading with. So let's just kind of move that off the table. We want to say technically we do expect this to hold. If it were not to hold, we would absolutely secondarily expect it to get all the way to the bottom of the frame, somewhere near the 236 area. So sort of up to you, up to your trading expertise. If you think you can ride that all the way out, that's up to you. But we have it right here. We have it right here. Any deviation along this upward sloping line that is purple or white will indicate that things are weakening tremendously. Expect it to come very, very close. Expect it to do a hairline touch, something that may look like this, where the candle body close does not actually sit underneath it. Now we're looking at 64-minute candles, so on this particular chart, you'd be in that position for as much as an hour. Now in reality, that wasn't an hour. If you were to look at this, it's probably happened in a minute, maybe two, and that's exactly what you'd expect here. So if you see a flash here, kind of stay calm. You may penetrate the Murray Math line just briefly, but you do want to see support coming in here. If you do not see support coming in here, expect that we go and take the longer trip, and that longer trip will probably have several stages as well. The chart would look pretty different. If we wanted to take a look at what some of these would look like, we'd be looking at something that kind of looks like this. This would be the ideal scenario of the rally wave. Have it get caught here for a minute and then go. This is what the positive rally wave would look like. Let's take a look at what the negative rally wave would look like. It would exceed a little bit here, and it would flash, signaling the weakness. It would be rebought, and then perhaps it might confuse you. You might consider this the rally leg, but telltale sign is it'll actually start just wrapping around the center line. It'll start wrapping around the center line, and then actually start displaying weakness in which it can no longer achieve the center line. And then at that point, people will begin bailing out, and you will see the fast decline. You'll hit Murray Math center frame. You'll get a little support there also off this downward trend channel center line, and then eventually collapse. And then from here, may or may not make a new low relative to the last low here. But what happens from here is usually one of these, another flash liquidity problem spikes, which is spikes real hard, and then of course it slows back down, and eventually you come out of this downward spiral. So this is sort of possibility one, possibility two. Lots of activity that's going to be occurring here. You want to pay attention to that and see if you can protect yourself. Anything below 246.08, we'll go ahead and put that here on the chart. Anything below 246.13 is looking like it may be problematic. So you need to be on your toes as you near this line. If you do near this line and you do break it, it's up to you. Do you have enough capital? Do you have what it takes to go ahead and ride this thing out? If you do, you'll probably see another set of support here at Murray Math 4/8, and then of course final support is down here near the 1/8 line here. So these will probably yield. We have a particle line here. If you were to see this probably would not hold this market. It would probably come on down and retrace. So hope that helps. Let's keep our eye on that and see how it goes. Happy trading.